What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. Skipping the normal intro, but please leave a like on this video, subscribe if you're new. These things really help the channel grow and that helps me create better videos for you. That's a win-win, and we like that here at the Wealth Investing Network. We're jumping right into Vertex Pharmaceuticals today. I've been looking at this company for a little while, especially since they took a big drop back in October of 2020. Seeing a drop like this makes me think, this could be a market overreaction, especially if it's a good company. And so I put it on my watch list. Going back to the article that I was looking at that time, basically from what I can tell, this is a healthcare company and one of their treatments was reportedly being discontinued after the drug trial had poor results. And this happens a lot with healthcare companies, with pharmaceutical companies. But what looked like an overreaction at that time was that they were going to lose approximately $10 billion in their market cap over a failed drug trial that really isn't even their main drug. This was not something that's their bread and butter. According to the article, the pullback in Vertex seems to be more about the shareholders' concerns about the company's non-cystic fibrosis assets. In terms of the cystic fibrosis market, this company has a virtual monopoly. I see a ton of biotech stocks on the market. A lot of them aren't profitable yet. A lot of people are buying due to speculation, not even based on earnings, not even based on the revenue that these companies are bringing in. A lot of it's about the prospect of successful trials. And there's companies like Moderna where if you get in early, you can make a lot of money, but it's a wild ride because it's so speculative. Vertex is not one of those companies. Vertex is a growth stock and a value stock. This is a company sporting a 170% gain in the past 5 years. I mean, when you look at it, you definitely could have tripled your money with this stock within the span of a few years. And at the same time, this is a wildly profitable company. So just as a quick background, Vertex has a drug that treats cystic fibrosis. This is a genetic disease characterized by thick mucus production that can obstruct the lungs and pancreas of a patient. There are no cures for cystic fibrosis, but this drug can improve the quality of life for patients. So back in October 2019, the U.S. regulatory agency, the FDA, Food and Drug Administration, approved combination therapy Trikafta as a treatment for cystic fibrosis patients with the most common mutation. You can try to pronounce that if you want, but around 90% of these patients have this mutation. 2020 was its first full year on pharmacy shelves, and it generated almost $3.9 billion in sales. Analysts believe that this drug alone could hit $6 billion in peak annual revenue. Jumping into macro trends and looking at Vertex Pharmaceuticals' revenue, you can see that their trailing 12-month revenue is about $6 billion. So in the near future, they could be hitting $6 billion with just this one drug. And the company has a lot more to offer than that. And the company has a lot more to offer than that single treatment. And this is a company that's generating cash. It ended 2020 with $6.66 billion in cash. And another reason why this stock got on my radar is because I do follow ARK Invest and the quote-unquote Cathie Wood stocks. Well, Vertex Pharmaceuticals ranks as the 6th largest holding in the ARK Genomics Revolution ETF. ARKG is on a pullback right now, but it's still up almost 200% in the past year. Vertex is also studying treatments for other rare genetic diseases. I like that their pipeline includes candidates for rare blood diseases, sickle cell, rare kidney diseases. And with this bread and butter cystic fibrosis treatment that affects about 75,000 patients in North America, Europe, and Australia, and considering Vertex has no competitors in this market, I agree with these articles. I think this stock is going to be a winner. But hey, I'm not a financial advisor, and this is not financial advice. If you're here to follow my journey, great, because these videos are for entertainment. Do your own research. Always do your own research. But here on this channel, I like to share my own research. If this is completely foreign or unfamiliar to you, check out my How to Analyze Stocks video in the description, along with other videos. But we're going to jump right in. We've got their stock price, their market cap. This is a $56 billion company. And so we're going to see some financial indicators that can maybe tell us if this is a reasonable price. First one up being the PE ratio, or price to earnings ratio. This is sitting around 20. Compared to the market, this is very attractive to me because the average PE ratio for the S&P 500 historically is 20, and these days the average is really sitting somewhere between 30 and 40. The average for the biotech industry is also around 30. To me, this is a signal that it's undervalued. Next up, we've got the price to sales ratio. Generally, I like this number as close to 1 as possible, because it's basically the market cap divided by the total revenue. Like we talked about, this company brought in about $6 billion last year, and it's still a hot enough company where you're going to pay a multiple for it. A reason to pay a multiple is growth, but 15% revenue growth, while that's solid, that's not the kind of growth that would lead me to believe that this is an undervalued price to sales ratio to pay. So jumping back into macro trends, I want to look at the price to sales ratio historically. And in the past 5 years, we're sitting at about the lowest price to sales ratio that we've seen in recent memory. The last time this stock had a similar price to sales ratio was about 8 years ago. So that shows me that investors have been excited about this stock for a long time, and that could be a symbol that it's undervalued right now. So that's interesting. The net income margin is amazing at 44%. Their current ratio, which is basically assets over liabilities, is great. They have way more cash than debt. They have less than $1 billion in debt, and like we talked about, they have over $6 billion in cash. And according to the analysts, they're expected to grow at a similar pace in 2021, and you can see their analyst target mean price, and mean just stands for average. So my quick take is that I'm up on this stock, but I also want to jump into Webull and show you a couple of indicators. First up is the simple moving averages. These are technical indicators that lag behind the actual stock price. Adding them here, the green line is the 20-day moving average, the red line is the 50-day moving average, and the orange line is the 200. And you can see we're still well below where this stock has traded on average in the past 200 days. This pattern of green over red over orange is what I like to see. And when it's reversed, that represents a strong downtrend for me. But this stock seems to have found support at close to the $200 level, really around 205. And I'm going to add in one more indicator that I really don't talk about a lot on the channel. But in the comments, people have asked me to show the MACD. I'm not going to get into it too much because this is a quick take, but in terms of technicals and momentum, a MACD crossover right about now could indicate a very bullish sentiment for this stock. So my quick take is I would be up on this stock. This is currently on my watch list. I'm looking for more buy signals. In the long-term view, I think this stock has a ton of potential, but I want to hear from you. What do you think? Drop a comment, like this video, do all the YouTube things. Thank you so much for watching. I'm going to try to upload this before the market closes, so I'll see you in the next video.